Hello and welcome to this week's episode of Nucleus Investment Insights. Today's episode is called Why India is Not the Next China. For more than 2 decades, people have asked whether India represents a similar economic opportunity for Australia as China. With Albanese's recent trip to visit Modi in India, the question is back in focus again. India certainly represents a significant opportunity, but there are nuanced differences between the two countries that means it's unlikely to be as big or as important to Australia as China. Today, we're going to debate the ins and outs of this juicy issue. Today, we have Damien Klassen, Nucleus Wealth Chief Investment Officer, and Leith van Onselen, Nucleus Wealth Chief Economist. Guys, welcome.
Hey, guys.
Good to have you here, Leith. It feels like it's been a while, so good to see you back.
Yeah, it's been a while, a couple of months, I think.
Yeah.
I lose track of time. It's gone so quick.
Yeah. My name's Sam Kerr. I'm the Senior Financial Advisor at Nucleus Wealth. Just a reminder, the information in this podcast is general advice and does not take into account your personal situation. If you do want to discuss your personal financial situation, please go to our website at nucleuswealth.com/contact and you can book a call with me to have a chat. We are live every Thursday at 12:30 Sydney, Melbourne time. So jump onto the Nucleus Wealth YouTube channel and you can ask any questions that come to mind and we'll do our best to answer them during the show. You can also follow us on your preferred podcast platform as our show is available on all the majors. So those are the intros out of the way. Damo, I'll hand it over to you to give us some context on the topic.
Yeah, thanks, Sam. So look, there was a whole, as you said in your intro, Albanese just visited India, and that sort of led to a whole bunch of different things about and talks about why India and Australia could get closer. We both like cricket, and India is now bigger than, or at least the same size as China in terms of demographics, and so therefore, all this massive growth we saw out of China could just spread to India, and that'll help Australia in terms of its economic growth. Is the thesis that we want to sort of largely debunk in this. But let's start with I've got a couple of charts that I want to just sort of run through that the Australian Financial Review ran. So talking about the bull case for India. First of all, demographics, in that India's got a young population and growing, and it's number 3 in terms of economy size, and it's now number 1 or equal number 1 or slightly behind or slightly in front, depending upon which measure you want to take in terms of population, but certainly growing much faster than China. And so later on this year should be undisputed number 1. Talk about the in the education side, in that there's a lot of students, sort of 160 odd thousand in from China in Australia, these numbers are from 2020, so a couple of years old, but versus only 90 from India, and so therefore, the simple extrapolation says that Indian students could probably double. Skilled migrants. Actually, I'm not quite sure why they put this one as one of the bull cases. It shows that India is already one of the largest sources of skilled migrants for Australia. But I think the discussion was around saying that can grow and there's lots more opportunities and for Australia to bring skilled migrants over from India. Resources. So this forecast on thermal coal imports, just looking at India and talking about India growing as an importer of resources, as it gets richer. And then geopolitics. It was sort of the next big one, is saying, well, India and Australia are both part of the Quad, which is effectively a group sort of designed to combat China from a geopolitical perspective in the Pacific, and so therefore the politics line up between India and Australia. We're both democracies and we both like cricket, and so therefore things will get closer. So that's sort of the background, and I guess the bull case, and says and each of those has some grains of truth to it, but it's I just want to highlight how different China is. China is in terms of its growth model and what it's done, And the argument you're making for India there, you could make for a whole bunch of different countries. There's lots of different African countries that, or as a region, Africa is very, very big, and lots of growth is possible from there. There's some arguments you can make from South America. You can bundle up a bunch of sort of poorer Asian countries like Indonesia and sort of aggregate some of those, and you get very large populations as well. And so I guess a lot of these arguments stand across any country, and the question is really, what makes a country go through this sort of growth that we've seen in China, and that this very intensive economic growth in terms of what they're building and what that means for infrastructure and need for resources, which is really where Australia comes in to play for that. So I guess what I wanted to do is highlight there's this Gershenkron growth models, or there's a whole bunch of different names for it, but that's probably the most common one is that named after an economist who sort of identified some of the key factors of it. Now, I probably should have put technology theft first. That's not actually the main one, but that is usually heavily involved in these growth models. Trade protection is important over sort of, especially the younger sort of manufacturing companies within these economies, having a financial system to finance and things set up. And the big one is this CapEx, very CapEx heavy and very infrastructure heavy. And so we've had lots of good examples of it. So the US actually ran this. This is for anyone who's watched the musical Hamilton. Alexander Hamilton was actually one of the architects of this growth model in terms of the argument at the time was the US is a frontier market, that England had all this cheap manufacturing, and so there's no sense in competing with England. You're far better off just growing stuff and digging stuff out of the ground and sending it back to England and relying on them for cheap manufacturing. And his take was, no, that's not the case. There is this idea of comparative advantage, but that can change over time. And you're much better off having a reasonable sized manufacturing sector because it's a lot steadier than agricultural cycles, not reliant on the weather and things like that. And you're actually adding more value into the chain. And so the US very much followed this model. They stole technology. They had trade protection on their sort of infant industries until they caught up with the US ones, and they did a lot of sort of infrastructure and capital expenditure to really get their economy ticking over. Germany under Hitler was the same. They had an extraordinary period of economic growth throughout the 1930s, which effectively financed the Second World War. But a lot of this was coming back to this idea with the capex and infrastructure. If you reduce the current spending of your population, so you could be earning whatever it is, $1,000 a month, say, and I reduce that back to $800 or $900 a month for my population, with the view that actually what's going to happen is I'm going to invest that into capex and infrastructure and these things. It's actually going to be very growth positive, and within 2 or 3 years, the salaries of my people will be back up over 1,000 because I've invested in these infrastructure that's particularly positive in terms of growth. And then off I go into this huge growth cycle. So Germany under Hitler, the Soviet Union followed this in the early Cold War sections. The reason they were a competitor with the US was because they ran this model of restricting what their people internally would spend and putting it into the capex and infrastructure, and that was very intensive in manufacturing. Brazil had a miracle throughout the 1970s. The Brazilian miracle, it's called, effectively ran exactly the same thing. A military government, lots of infrastructure spend, and really pushed it. Now, the issue with a lot of these, and the Soviet Union and Brazil in particular, is they couldn't get out of this. They started this. You start this model where you're restricting spending and you're pouring lots of money into capex and infrastructure, and it's great when you first start because I've got a river here with no bridge across it, and I build my first bridge, and all of a sudden people don't have to travel 100 kilometers, and it's very effective, and they save all this time, and it's great for growth. And then that bridge starts to block up, and then I build a second bridge, and that's pretty good as well because it helps alleviate the traffic on the first one and speeds things up, and it's great. But by the time I get up to my 10th and 15th bridge, it's starting really not to make that much of an issue. And if I've built up this huge bridge making part of my economy that's like pumping infrastructure all the time, then eventually I get to the stage where I'm taking on debt to build infrastructure that people actually don't really need. But we keep doing it because there's all these companies that are involved in manufacturing bridges and airports and infrastructure, and they're making big political donations and they're making lots of money and they don't want to go bust. And so it's the whole vested interest problem. And that's exactly what sort of ran into problems in the Brazilian miracle. Soviet Union sort of ran into similar problems, particularly in terms of asset allocation and just pouring too much into it. South Korea and Japan ran these exact same models. They were more successful and managed to get out the other side, but both of them had crises at the end of it. And in Japan in particular, that while they managed to sort of escape the middle income trap, they still had their lost sort of double decade of after this, where they'd grown their capex so much that when that finally had to come back to a more realistic level, their economy flatlined for decades. China is running exactly this same model. It's reached the end of it. It's in this phase of pouring lots and lots of extra debt into building more infrastructure that's arguably not needed anymore. And so that's where our view is that's sort of going down the same path. Now, India is not pursuing this type of model. Could they do it? Yeah, absolutely, they could do it. They could change their model, but so could Indonesia. So could half of South America. So could most of Africa could decide to go down one of these models as well, and generate lots of capex and lots of infrastructure and lots of demand for resources. But they're not doing it right now. So investing as if they might do it is not the thing to do. So if India decide to do it, but there's demographic and there's probably not demographic. Sorry. There's political and other roadblocks to doing that. And so, the question is, will they do it? The answer is maybe, but there's no sense in investing in India becoming a China until you actually see them reducing the salaries of people within India to follow this model. Sam, I might hit you.
At Nucleus Wealth, first and foremost, we're an active and passive investment manager. If you like what you're hearing and you want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. Our 3 tactical portfolios we offer hold combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation on these portfolios with the goal of protecting your capital in times of market uncertainty. We also have the Active Core International and Active Core Australia portfolios that are purely international or Australian equity portfolios. These are chosen from the MSCI World Index using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Right. So back to demographics, or sort of onto demographics. I think this is where I might flick across to you, Leith. I guess I'll introduce it by saying, the irony to me seems on this one is India is now the world's biggest population at 1.4 billion or close to. The question I've got is, well, if they haven't already become a massive trading partner at 1.4 billion, how many people does it take before they finally become a massive trading partner? But anyway, that, over to you in terms of demographics.
Yeah, cheers, Damien. Look, that's a fantastic question there. As Damien's beautifully explained, India's all the buzz at the moment. It's been described as the Indian decade or the Indian century coming up. The IMF's chomping at the bit. India's GDP growth's expected to be 6.1% this year and 6.8% next year. So it's it's supposed to be the next big thing. Now, the main reason why obviously Australia's all bullish on it is for all the stuff Damien mentioned. India is now the largest economy by population in the world. It's just overtaken China by most people's guesstimates. It's also expected to grow quite strongly in the period ahead. India's fertility rate is, has been higher than China since the 1970s. So India's fertility rate's 2, which is just below replacement of 2.1. China's fertility rate's only 1.1 and falling. And what that means is as life expectancy increases, India's population will continue to grow in size, whereas China's is now falling. because it's gone well past that the sort of pig in the python. And because of that, everyone sees India as it could potentially grow to 2 billion people at some point. And because of that, we're going to get all this growth, and it's just a fantastic opportunity for Australia, et cetera, et cetera. But obviously, it runs into all the things Damien just talked about. One thing to note about India's population, apart from being really big, it's also, very young compared to other developed economies. So India's median age is 28, and that compares to 37 in Australia and 38 in China and the US. So that also means that India is going to provide the bulk of, say, young skilled migrants in the world, because it's the biggest economy. It's also got very relatively young population. So we're also seeing that as a way to potentially tap into that. So it's going to provide, a lot of young migration to various countries around the world. And they're obviously, Australia is one of the targets of that. So really that's kind of the main sort of growth story behind India. Is it's this big economy. It's currently growing very quickly. Now, what I will point out, although it's grown at 6% this year, it only grew at 3.5% over the last 3 years, so 2020 to 2022. And what that tells you is that the current growth is really just a rebound from the pandemic. The other thing to point out is India hasn't been creating many jobs. So India's unemployment rate's over 7%, and it's been over 7% for a really long time. And it actually needs to create like 200 million jobs over the next decade just to soak up the extra people coming in. So it's, there's a big question mark over that.
The other thing I just want to hit on demographics is one of those ones. So if you look at different states, so Goa, which is one of the richest states there, has got a population of a fertility rate of 1.3, which is much closer to most developed countries. And I think there's some states in there that have got a fertility rate of only 1. Versus some of the poorest states. So Bihar is one of the poorest ones there, and that's sort of still running at 3%. So in a way, it's an economic argument for this in saying if you've got lots of poor people, then chances are you have a high growth rate, and vice versa. And there's an interesting debate going on in terms of that about which comes first as well. And this is probably important as well for given Australia's bringing in as many people as they possibly can at the moment. Is that the question is, do rich countries then see a lower birth rate, or is actually some of it work the other way around? Is it if you have a lower birth rate, your country actually gets richer? And the argument behind that is basically that if you've got a government trying to run and all it's trying to do is just build more stuff because there's huge amounts of people being born every year, and you've got to keep building more roads, bridges, and schools and hospitals and all that type of stuff just to keep up with your existing population, is that the quality becomes less of an issue than just the actual work and the activity about building this stuff. Whereas when you see a lower growth rate, now it's all about quality. It's less about quantity of just saying, I just need to build more stuff. It's like, no, how can I improve the ones I've got and actually make them more productive? And, and then if you've got 6 or 7 kids, then, living on a farm or whatever, then there's quite possibly you're not educating those kids as much. Whereas if there's fewer kids, you can afford to get them better education, and that's something that'll grow the economy. And so, there's probably, it probably goes in 2 parts. There is one about, rich countries have fewer kids, but there's also quite possibly a feedback as well that works in the opposite direction to help reinforce that whole case.
Yeah, 100%. And it's interesting you mentioned that about the India's growth model there. When you got heaps of kids, well, that's kind of what Australia's pursuing with our growth model.
Exactly.
Bring a whole people in and build stuff for them and sell coffees to them.
Exactly.
Rather than quality growth.
That was exactly where I was leading to. But that was that. Yeah, if you've got all we're worried about is we need to build more roads. We need to build more roads to fit on, all this extra traffic we're bringing on. Versus actually, let's try and improve our systems instead.
Yeah, that's right. Well, just another thing to add. So Damo went through the whole growth story beautifully about how India's not taking the China route and saving and then building up infrastructure and all that sort of stuff. The other thing to point out is for a country of 1.4 billion people, India's manufacturing economy is actually very small and uncompetitive. So manufacturing only comprises 14% of India's GDP, and that compares to 27% in China and 25% in Vietnam. And just to put that into context, Vietnam's got 100 million people and it exports the same amount as India, 1.4 billion. And, a lot of investors are moving out of China for, the last few years, given everything that's happened. But interestingly, they're mostly going to Vietnam and Southeast Asian nations, not India. And one of the reasons for that is, as I just said, India's manufacturing is not particularly efficient. But also, the Southeast Asian nations have signed the Regional Economic Partnership Agreements. That's like a big regional free trade agreement, whereas India refused to sign that FTA because it believes it can't compete with those nations. So it's just sort of it's just another kind of small tidbit of information which suggests that India is not this great growth story that everyone thinks it is. It's really just a population play, and it could become that growth story if it does the things that Damien explained. But it's not there yet, and until it goes in that direction, well, it's pointless viewing it as another China because it's not. So yeah, just another sort of microcosm on that.
They're your favourite students. Oh, sorry, immigration. Sorry, before we get to students, sorry.
Yeah, that's well. I mean, look. Let's face it. It's basically tied, so it's almost the same thing. So just one thing to point out. So India's become Australia's biggest source of migrants. So the number of Australians who were born in India increased by 56% between the last census, so between 2016 and 2021. India is now the third largest country of birth for Australians, and that's behind Australia and England. So, it's the second biggest migrant source, but it's the fastest growing in Australia. And it's also, although China's our biggest student source overall, India's by far the fastest growing. So India had the largest number of student visa applications in Australia last year. It is now the second largest visa source overall. So this gets back to that growth story that Damo said before. The government sees heaps of growth in these in students from India, and also obviously immigration from India. So it's a source of that according to them is a great way for us to expand the international education industry and education exports.
Yeah,
but
I guess on the immigration side is and I'm sure I'll say this in the right way, is it does, it's sort of, in a way, it's like, well, who cares whether India is the biggest or not? What really matters to Australia is how many's coming in. Doesn't really matter whether they come from India, Pakistan, from Sri Lanka. Pick up whatever country you like. Doesn't really matter. Maybe there'll be a bit of in any case there'll be increased flows and increased trade between the countries based on dealing with people in their home country. But in a way, it doesn't. To me, the country of origin, from an economic point of view and an investment point of view, if you're talking about the same number of immigrants, doesn't really matter which country they're coming from. No,
it's a number and what skills they bring, I guess, is is the thing that matters. It's not, who cares? It's just it's quantity, because that impacts obviously quality of life, infrastructure, carrying capacity of the country, all that sort of stuff. But it's also the skills. So obviously, if you bring in a whole bunch of people who don't have skills, well, then that's going to be not as beneficial to your country as you bring in a whole bunch of people with really high skills. I mean, that's basic.
Well, that probably leads straight into this. Let's jump into the Indian student set. So
100%.
We've had Salvatore on the podcast before, but because he's got some good Salvatore Bones, he's got some good stuff on this. But
he's fantastic. So basically, we just talked about the whole sort of quality thing. Now, the big growth market for students now is obviously India. So the federal government has relaxed, it's basically expanded the number of hours that an international student can work while they're studying here. And they've also extended the amount of time that students can stay in Australia once they finish their studies from 4 to 6 years for a bachelor degree, and also to 4 years if you do vocational education. So they basically put this big carrot out saying, if you come to Australia, you can work while you study, and you can also work after you study. And then they've also expanded the permanent migrant program as well. So it's also increased the chances of then getting residency. Now, Salvatore Bones, when he came on here, made a great book, and this quote comes straight out of it. Made a great comment. And this comes straight out of his book, which he wrote 2 years ago. And he said there's only 1/8 as many families in India who can afford an Australian education for their child as there are Chinese families. And this is actually borne out in statistics. So although we get a lot of Indian students, and they're now our fastest growing market. Most of them actually come here to work and for immigration, not actually to get educated. And this is actually shown in the data. So I've got one chart here, which is actually from the 2016 census, and it shows that only 21% of Chinese students worked in the labour market while they studied, whereas in India it's nearly 80%. And that just basically shows that it's not Chinese students are more likely to be a genuine export, because when they come to Australia, they predominantly study. They don't work while they're here, and they pay for their studies via money that comes from China. Whereas in India, most of the students come here with not much money. They don't bring it from India. Then they work to pay for their study, which isn't actually an export, even though it's counted as such by the ABS erroneously. And what that means is the economic benefits aren't as great to Australia if you, on average, if you bring an Indian student versus a Chinese student, because it's not genuine export income.
Yeah, and then actually just put that in perspective, basically the way they account for it is if you have somebody comes over and works in a part-time job and earns, say, $30,000 in a year and then spends $30,000 on rent and
count as an export
and food, that's right. So if they're
it's absurd.
If it's a local student, so one of my kids goes to uni and does exactly that, and then somebody comes from India who does the same thing, both spending the same amount of money, both living together, and one of them gets treated as a $30,000 export, and the other one's just part of the Australian economy.
Yeah, and actually, it's more likely that the Indian student's likely to be an import, because a lot of them, and this is students from poorer nations, whether it's Nepal, India, whatever, they tend to send money home. So that's actually an import, because it's money coming from Australia to India, which is earned here. So it's actually, they're more likely to be an import. But I mean, I always describe them more as a people import than a genuine export, because if you come over here to work and then you're likely to stay for permanent residency, you're actually a people import. So the whole thing's a bit of a joke. But there was also a survey that came out late last year by Navitas, which is like a international education provider, and it sampled different countries around the world, or different regions around the world, for why they study in Australia. And interestingly, well, not surprisingly really, but students from South Asia, which is the subcontinent, India, Nepal, other places, they chose as number one reason for studying in Australia is access to post-study work rights. Cost of study was number two. So they want to work here. They want the course to be cheap. Number three was opportunities, was to work while they're studying. So number one was to work after they study. Number two was cheap education. Number three was opportunity to work while studying. Number four was permanent migration. And their last reason for coming here was the quality of the education. So what that tells you is they're not actually genuine students, most of them. Or they're not coming here for the quality of education. They're coming here to work, first and foremost, and secondly, permanent migration.
Whereas interestingly, China is the number one is safety and security, and the number two is quality of education.
Exactly. So that there's just straight in your face why the economic benefits from expanding the Indian student trade, which is what the government is going headlong trying to do, and in turn that's ramping immigration to unprecedented levels, is kind of, in my view, a fool's errand. And it's also why why they provide far less economic benefits than, say, China, and why India can't replace China in the international student scene.
Yeah, in the type of, that's right. Look, there's nothing, and I guess I just want to highlight as well. So we're not like we're saying there's anything wrong with students from India or students from versus any other country.
Just doing China versus India comparison.
We just need to know that, look, this is what's happening. Is what we're finding, what we're getting is people, regardless of whatever country, but whether it's who are going to come here and work, and then they want to stay, and that's there's no problems with that. I don't have an issue with that. But I guess what I'm saying is, don't pretend to call that an education export, because that's what we're doing.
Yeah, just on that, I've actually emailed the ABS and asked them to explain why they measure it that way, and they haven't responded. I've emailed them again; they haven't responded. So I'm trying to do basically an FOI request to call them out, and maybe they realise if they respond, they'll be on a macro business, and the whole farce will be covered up. So did that a couple of weeks ago.
Yeah, and then that flows through to the pay then, of the skilled migrants.
Yeah, that's right. Now this is interesting. So having said that, so the whole thing about Australian skilled migrants get paid a lot of money is actually, a bit of a farce. They don't get paid a lot of money overall. Interestingly, so the unfortunately the latest data here is 2016-17 that the ABS has released, but the median income of skilled migrants from India was only 59,900 in 2016-17. So that's pretty low. Now, just having said that, I've just said China's a genuine education export. But the median income from a Chinese skilled migrant is only 45, so it's even worse. But what I'm trying to say is the government's plan is to try and bring in as many migrants as possible at the moment. The largest source of them now are currently India, but they don't get paid much. So
that's holding wages down elsewhere.
Yeah, that's right. And so if you actually go through the countries here, the ones that the nations that earn the most tend to be, you've got Ireland, 82,000 or 83,000, UK, 70,000, South Africa, 65. Those are like the top three. And these other nations who tend to be, poorer nations, like South Africa is pretty poor, tend to get paid less, the skilled migrants. So the Australian government's plan is to basically bring in as many people as they can. Most of them come from India. They're not paid very much. Most of them come through the student stream, who obviously come here to work,
and again,
et cetera.
Nothing wrong with this, but I guess it's a point of saying you can't say that, hey, there's this great source of skilled migrants that we're going to take advantage of, and we're going to become a much better country because they've had this great education in India, and they're going to come over as this fantastic skilled migrant and bring all these special skills to Australia. It's actually, well, no, we're not paying them like they are. We're basically paying them as if they're coming over and performing more menial tasks.
Yep.
And so the chances are that is genuinely what they're doing. They're not really particularly skilled. And so if you think Australia has got there's a huge benefit for Australia in terms of bringing over lots of quite low paid people and integrating them into the economy, then we're on the right path at the moment, and there's a boom coming. But if you're of the view that actually quality matters over quantity, and actually having highly paid people who are good at their jobs and more productive is actually a better way to grow an economy, then we're doing exactly the wrong thing.
Yeah, and it's interesting to point out at this point. So just only a few weeks ago, the Albanese government, Albo went over and signed an agreement with Modi, who's their prime minister, a mutual recognition agreement. And basically what that means is from now on, or if you're educated in India in a university or vocational education and training, you are now considered to be educated in Australia. So they've basically got mutual recognition. Right. So and I question that because the number one ranked university in India is ranked over 400. The worst one's ranked at like 1900. And so based on that alone, if you trust the university rankings, the quality of education in India is pretty low compared to Australia. And that there's just going to expand the whole migration pathway even more, because they've basically made it so you don't even have to come over here and study anymore. You can, if you did a XYZ degree in India, you're now considered to have done an XYZ degree in Australia, and you now qualify for jobs. So, yeah.
Right, Sam, maybe across Sam to the passive.
We'll be back again shortly. If you like what you're hearing but want a passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia, which has been labelled ETFs 2.0. The benefit of direct indexing is you can customize your index as you directly hold each stock in the index via your professionally managed account, as opposed to an ETF where you have one fixed security. Ours are similar in cost to many ETFs, and they allow you to customize your investment with our ready-made and bespoke ethical, sector, and asset class screens and tilts. We have around 80 to choose from, and this allows you to customize your portfolio to suit your individual preferences. An example of how you can use this is you can exclude fossil fuel stocks, exclude any stocks involved in war, tobacco, gambling, and many others, which you can see on screen. You could also then include a cloud computing tilt, a cybersecurity tilt, and a growth or value stocks tilt if you think these sectors are well positioned to perform well in the future. You can see the 30 tilts we have here on the screen now, and you can find out more at nucleuswealth.com. Now back to the show.
Right, so onto a couple of other issues where things also work against India, and I don't think it's as positive as what is made out. So I'm actually going to combine the first two. The resources and geopolitics probably deserves to be sitting together, just given recent events. So the geopolitics, certainly Australia and India have got, I think, a relatively shared alignment in terms of what's happening with China. The issue is India is very close with Russia, so it's not the same, say, relationship as Australia might have with, pick another country, Canada or Ireland or whatever it is, in terms of shared outlook and shared view on the world and all democracies and things like that. India is a democracy, but and a former British colony as well, but they're certainly a lot closer to Russia than others. And what that's meant is that's where, if you look at where a lot of Russian oil is ending up, that's all ending up in India. That relationship has been close for decades. It's unlikely to change, or it doesn't look like it's changing at the moment. And so, certainly on the energy side, it's more likely that if Europe is cutting out Russia out of its energy imports, and that Russian energy needs to go somewhere, then China and India are the most likely cases or destinations for that. And if that's the case, then that obviously doesn't leave a lot for Australian energy exports. Coal has been increasing and is expected to increase. Partly that's India actually has lots of coal. Partly that's an issue is that they've actually got quite poor transport systems, and sometimes it's actually cheaper for them to bring in coal by boat into regional areas than what it is to try and ship it from the other side of the country, or from the middle of the country across to coastal areas. But the other thing is, that's obviously an area as well where India doesn't particularly have a well built out energy grid, and so arguably that's actually a negative in terms of the fossil fuels, and that they are more likely to sort of move quite quickly to renewables and some more distributed grids. And if they are moving to more distributed grids, then that's negative for coal. And plus the whole part about, do you really want to tie our economic mast to try and export more coal in the current geopolitical environment and global warming and all the factors that are going into that? There's a short-term stopgap while renewable energies pick up, and while there's missing energy from Russia, but the longer term outlook isn't particularly good. On the iron ore side, India again has lots of iron ore. They're actually an exporter, so they would need to go from being an exporter to being an importer first. So there's a fair bit of growth they can do internally before they'd actually turn into an importer, and they're just not looking like doing that at the moment. So there's significant growth they'd have to do before they'd become an importer of iron ore. So that's on the resource and geopolitics side. Services versus manufacturing. Leith spoke a little bit about manufacturing, but India is very big in the service sector in terms of exporting. It's not. I guess it's not that huge given that given the size of India. So as a percentage of their actual own GDP, it's not that big. But as they're a big country, there's lots of IT outsourcing there. The thing is, IT outsourcing is not particularly resource intensive. So for Australia, that's again. If there's large manufacturing in India, then that's resource intensive and needs more. But the issue is if that's India taking away manufacturing China and we're exporting the resources to China, then it just means we're it's still headed out of Australia on a boat. It's just whether it goes to India or whether it goes to India or whether it goes to China. And then the final one is this idea about artificial intelligence. And so there's obviously been this big rise of ChatGPT and a number of other AI systems that are out there and really starting to take off right now. India is actually especially vulnerable to these systems. So within information technology, sort of our assessment is that something like a chat GPT does not replace programmers. It's actually a tool that they use to become much more productive. So in the same way as 30, 40 years ago, you used to have a whole bunch of people sitting with calculators and typing, do calculations, and then eventually you got spreadsheets and you got processes and all that type of stuff that then allowed individuals to do all the calculation without needing sort of lots of support. It makes the people actually doing the calculations much more productive, and the people who are writing the original computer code makes them much more productive. What India tends to be good at and tends to do a lot of is some of the lower value IT work, which tends to be, say you have a programmer who writes 80% of the program and makes it work for the main system, and then ships it across to poorer countries and places like India to say, okay, now go and this works for the US. Now go and make a version that works for Europe, and make a version that that is more error resistant, and make sure that if we don't get divide by zero errors, or if people put in funny things, that the security doesn't sort of blow up and all that type of stuff. A lot of that is quite has been quite labor intensive work, and that's where some of these artificial intelligence is really creating significant productivity gains, which means you still have your programmer sitting in the developed country doing that work, but now you no longer need to outsource as much of the cleanup to other countries. So that's one part. Quite possibly as well, that for anyone who's used ChatGPT, its understanding is very good. It's certainly not perfect, but it's much better than some of the previous iterations. India tends to be a big source of, say, call centers, and if ChatGPT or all these artificial intelligence can take away 50, 60, 70, 80% of those calls because the understanding is so much better, then India is very much at risk from that type of growth. So if I was picking a country most at risk from the rise of AI, I'd be India would be, picking a list of countries most at risk, India would be right up there on that list. Leith, any other thoughts on other things that I've missed?
No, mate, I think you covered that off beautifully, actually. Well done.
Excellent. Thanks. Okay, so we've got the question of the week now. So this is for viewers to have some discussion in the comments section over the coming days. The question for this week is, will the long-awaited Indian growth deliver before 2030? So feel free to post your thoughts and engage with us and some of the other viewers over the coming days. And we have had a few comments come through, no real questions, but I'll read out a couple of comments. One from Philip. He's saying India's story, unfortunately, will be similar to the fall of Icarus, going by its ongoing political situation. And then he further says, for the population story to play, India needs to lower its wealth inequality, which has worsened in the last 10 years. So do you guys have any thoughts or anything to add on those ones?
Look, I mean, wealth inequality is important. And that he's absolutely right in that the if you start seeing genuine movement on the wealth inequality, then you can be more excited about the whole Indian outlook, because it was what Leith, part of that was what Leith was saying about, there's only an eighth as many students in India who can actually afford an Australian education. Part of that is this whole idea that if I've got 6 kids, then can I afford to send all 6 of those kids across to Australia to get them educated? Probably not. Or any country. But if I've only got 1 or 2 kids, then now I've got a much better chance of being able to afford that. And so some of that inequality, as you get the inequality sort of lessens there, you get more people. You'd like to have lower birth rates and sort of have that more people with the financial resources to do it. But that hasn't been happening. That's as you said, it's been the opposite.
Yeah, and part of that's because it's just not generating enough jobs as well. So, like, there was a story I read in the lead up to this podcast where basically in 2019, 12.5 million Indian people applied for 35,000 jobs in the Indian railways, and it led to massive, protests and that sort of stuff. So yeah, there is this issue. Yes, it's a big economy. It's growing fast now, at least, but it's still got mass unemployment. And there's a big question mark. Is it going to create enough jobs to soak up the extra 200 million people who are going to enter the workforce from its population growth? So it didn't do it over the last 10 years. It didn't create enough jobs. Is it going to do it in the next 10 years? And part of that is that's kind of an addition to this whole inequality issue.
Excellent. Nice one. We've had a couple of comments from Wiser. So he's saying, doesn't India, like China, have a freshwater problem? And would this be an issue in manufacturing if the water is polluted?
Not an expert, so I might dodge that one, but I would guess yes. Only from pictures I've seen, but I haven't examined that in a lot of detail. I do know there are, there's certainly. India has been built around, most of it's built around quite high rainfall areas, sort of near the Himalayas. And I just want to highlight that we are having more extreme weather events, and so they are quite potentially at risk from some of those more extreme weather events. But ex that, I don't have anything else to really on there.
It's also not alone in that regard. I think water is going to be an issue in a lot of places in the next 50 years. So. State the obvious.
Yeah. So we had a comment come through from David Lees. He's saying the Philippines would be equally at risk from AI if call centers are going to be affected. And we've had a question from Sammy JNZ. He's saying, is it worth pivoting out of China as a emerging market and into India, especially with the size of China as a proportion of an emerging market fund?
Yeah. Okay. So this is an interesting question. I don't do a lot in emerging markets. We're focused mainly on developed markets. But I guess I've got a couple of observations that's worth noting. That when you look at China as an investment case, what you tend to get is a lot of it looks relatively cheap, but that's because you've actually got a lot of state-owned entities within China, which are very cheap, and then other sort of more more private companies that are that tend to be relatively expensive on a global basis. So it sort of depends upon what you're rolling out of. If you're talking about rolling out of a Chinese state-owned entity into an Indian company, you're probably going to pick up a bit on growth. You probably have to pay a little bit more for it. It won't be as cheap, but you probably get the value out of that. If you're talking about a Chinese entrepreneurship company, is it like a private company within that? I think then now you're making a relative bet in terms of China as it goes through its slowdown, and as well trying to reorient itself away from construction towards more healthcare and semiconductors and things like that. Is that going to be better than in India with a more I don't know, I guess a more haphazard sort of growth style over the next little while, and I think it'll really depend upon a stock by stock analysis. I'd be quite keen, looking sector by sector within India, and looking sort of more for the companies which are in sectors that I think are going to grow and have the potential to not run into some of these problems we just spoke about, like with AI and services versus manufacturing, and take advantage of some of the benefits in terms of India, rather than taking a blanket bet on that Indian companies in general are going to perform well, because I think that's probably not the case. And then I guess the only other thing is noting that it's relatively difficult to invest in India as well. There's lots of much easier ways. Most brokerages and others have got ways you can invest in China, whether it be through companies listed in the US and others, different exchanges you can buy it on. Whereas it's or things through Hong Kong, which is relatively easy exchange to buy things through. Whereas India's quite difficult to actually get exposure and make sure you got your stocks and all that sort of stuff.
Nice one. And we've had one more comment come through from Sachin saying corruption's still a big problem in politics, the public sector and the judiciary, despite 8 years of the Modi government. So I guess that's another issue that we haven't really touched on in today's episode.
Yeah, all I'd say on corruption is, look, corruption's an issue in most emerging markets. And look, everything's got degrees. Yes, countries that have less corruption generally end up performing much better over the longer term. But India are certainly not alone in the emerging markets in terms of having problems with corruption.
Yeah, nice one. So we've had some pretty lively discussion in the comments today, which is great. So thanks for everyone that's contributed. And Damo, back to you for the investment outlook.
Yeah, so I guess the thing from an investment perspective, I really just want to highlight that India, yes, it could become the next China if things change, but things need to change. By the same token, Africa could become the next China, South America come the next China, Indonesia and the Philippines together, plus a couple of add a few more Southeast Asian countries, you could end up with the next China from these. But they're not doing it at the moment, so you really do need to wait until you see that proper change. From the rest of the economy and what we're seeing, the bank crisis does seem to be settling. The issue is maybe another bank will blow up, maybe not. Deutsche Bank looks like it sort of had a bit of a run on it, but really it's probably had its Deutsche Bank seemed to have its problems more from people thinking about the Deutsche Bank of a few years ago. They have already cleaned up a lot of the issues, and so probably going to be fine. The issue right now is the credit crunch and just trying to really tracking as many statistics as we can see and as many sort of forward indicators, sort of tracking how much these bank funding costs that have risen, how much that's playing into reduced credit for the real economy. And that's then leads us down the recession path. Those indicators are still very strong, so head in that direction. Earnings still look too optimistic. And so, we're still quite cautious in terms of an economic outlook.
Excellent, nice one. So that pretty much wraps us up. So, Damo, Leith, thank you very much. It's always a pleasure to listen to you guys.
Cheers.
Thanks, Sam.
Excellent. So if you like our content and want us to continue to make more, please subscribe to our YouTube channel now. Click the bell below to make sure you don't miss out on any special episodes and content we put out. If you missed the article Damien wrote this week, you can subscribe via the link in the show notes, and you'll get our weekly Nucleus news and investment insights. Like the video now, and if you know of anyone that might get some value out of today's episode, please share it with them. We do welcome your feedback on this podcast, especially in regards to suggestions for future topics. If you do have any ideas, please drop it in the comment section below or send us an email at contact@nucleuswealth.com. If you'd like to look at the slides in more detail, we'll post them in the show notes this afternoon, and you can view these at nucleuswealth.com/webinars. So from myself, Damien, Leith, and the rest of the team at Nucleus Wealth, thanks for watching, and we look forward to seeing you next week. Bye for now.